Overdraft protection, also known as cash reserve banking, is a cushion placed on an account to prevent charges from being rejected. It's an optional feature that allows account holders to use more funds than what they have, typically offered for checking accounts, but also available for savings accounts. To obtain overdraft protection, an account holder must enter into an agreement with their bank, which outlines important terms and conditions, such as fees and limits. As part of this agreement, a backup account, like a credit card, savings account, checking account, or line of credit, is required to cover any overdrafts. Banks have the discretion to offer overdraft protection, and even with an agreement in place, they can deny coverage for certain transactions if they deem it's not within the contracted parameters. Whether or not overdraft protection is necessary depends on an individual's spending habits. It's suitable for those who occasionally need to overdraft by a minor amount, and can be a more affordable alternative to standard overdrafts, which often come with heavier fees. Without an overdraft protection agreement, banks may either decline to cover payments or provide unauthorized overdraft protection, but with significant fees and interest charges. Overall, overdraft protection is a straightforward banking feature that can provide a safety net for account holders.